was a fear, I think 6 months ago, that we might have government antipathy toward Bitcoin in the West. You know, like you heard the most informed criticism was, you know, Ray Dalio's, well, it's so good, someone's going to ban it. It's like, it kind of, first it was, well, I don't get it, I don't like it, it's bad. And then it became, I guess it's not bad. And then it became, well, I guess it's not going away and it works, but it works too well. Then it became a Jamie Dimon, Ray Dalio, it's just too good. You know, even, you know, Frank Giestra, eventually everybody kind of revolved around or settled upon the narrative that, yeah, it's not bad, it's good, but it's too good. And that's why I'm afraid of it. I think you can conceptualize Bitcoin as digital gold, as digital property, as digital money, as digital energy. All of those are reasonable metaphors. And if money is, you know, money is the universal, most desirable commodity that we use to exchange value, right? In theory, it could become the unit of account and the medium of exchange and the store of value for all the capital and the civilization. And if I had to pick one thing to capitalize the civilization, I would say Bitcoin. Like, if there's $500 trillion worth of stuff in the world, right? And I was trying to figure out where the, you know, I think money is energy. Money is monetary energy. It's economic energy, liquid energy in the civilization. And if I'm looking for a container to hold the energy, I think it's Bitcoin. That's the best container. Most of the noise around regulation is really just the altcoiners, right? The DeFi people, the security token people, the staking protocols, the, you know, stable coin issuers. And, you know, they want to generate a bunch of noise that regulators are hostile, but I can't see any activity in the past 6 months from a regulator that was, in my opinion, hostile to Bitcoin. I think that smart people that are informed know they want to swap out their weak property for strong property, or their weak asset for strong asset. But there's a lot of debate there, right? So you know what I would say? I would say every property is weaker than Bitcoin. So sell your real estate, sell your equity, sell your bonds, sell your gold, sell your silver, sell your commodities, sell your collectibles, sell everything, buy Bitcoin. But I think you want to plug in a number, plug in 14%. Now, I think that the wild card here is that's in the United States and Western Europe. But I really think that what we're seeing is the system cracking in on the fringe in Turkey, in Argentina, in all South America. You know, the interest rates in Brazil are what, right? 9% right now. And the interest rates in Turkey have been 16, 15. So I think that in the developing world, you're going to see something different, right? If the US inflates at 14%, what people haven't really factored in is that everywhere else they're inflating 20% to 30%. And the question is, what are the consequences? And I think there are two really big trends, right? Which is, people are going to snap up digital currency if it's available, as much as they can get their hands on, and they're going to snap up digital assets, a la Bitcoin. We're picking a Pyrrhic battle. Like we're going to war over nothing, because if you just understand Bitcoin as property and you accept the fact that, okay, well, what's the negative? The negative is, if I transfer it and I sell it, I have to pay tax on it. That's the negative. What's the positive? You're not supposed to sell it. Like the positive, like the worst thing you could possibly do, in my opinion, is encourage people to give up their Bitcoin. So it's not a problem that you have to pay a tax if you just never pay it. The current tax code implies that you should buy it and hold it forever. And the current tax code of currency implies you should get rid of it as soon as you can, because there's no cost to get rid of it. So if we simply looked at the world like that, then we would stop wasting so much energy, right? If you've looked at every single banker, every time they say, well, is Bitcoin, is it a currency? Well, I mean, their answer is no, it's not a currency. Jerome Powell can't admit it's a currency. Christina Lagarde saying it's not a currency. And then the Bitcoin community oftentimes recoils in horror, like, yes, we are. Yes, we are. Why do you want to be? Like, why can't you actually be property worth $10 million a coin and not be a currency? If I told you, you could basically go from 0 to $10 million a coin, and everybody will help you along the way. Every company, every government will help you along the way to become worth $10 million a coin. Or you can fight with everybody, right? The entire way. And if you succeed, you'll have toppled every government and every political group and every company and destroyed the entire 20th century economy, but you'll have your currency. Like, what's left, right? Like, if I rip every single company to zero and I destroy every country and every political system, you'll have your currency. But what are you going to buy with it when every company is non-existent and every government doesn't exist, right? You can't even buy bullets to defend yourself in the post-apocalyptic anarchy that follows, because bullets get manufactured by companies that use accounting systems that run on dollars, right? So I guess my point really is, it's not a battle to fight. Like, ultimately, there's a view. The view is, well, the politicians have too much power, and they use the currency, right, to abuse that power. Yeah, right. And the solution is, you basically demonetize everything in the world that's in the physical realm, and you demonetize all the currency derivatives, and you just do it gradually in such a way that every company and every government that's smart enough to buy into it benefits from it. And then one day you wake up, and instead of 60% or 70% of the wealth in the world being a currency derivative, it's 10%. And, when 10% of the wealth in the world is a currency derivative and the rest is like digital property, then inflation won't be so much a problem anymore. Here's your best idea. What if the Chinese government forked Bitcoin and then made it illegal to use the first fork? But I think that the best way to think about Bitcoin mining versus buying Bitcoin is, everybody in the world has two decisions to make. One is their business strategy, and the other is their investment strategy. And the investment strategy is, how do I allocate my portfolio of assets, and what do I do with my free cash flows? And buying Bitcoin is an investment strategy. Business strategy is, how do I generate cash flows? And you can have a business which is selling anything: ice cream cones, writing books, broadcast television, mining Bitcoin, mining. You can mine gold, and then you can sell the gold and convert it to Bitcoin. So the point is, there's a million businesses. And if you're asking, what would I do? My answer is, you ought to be engaged in the business that you're good at, where you have assets and you have skill, where you can compete. And then you ought to set your investment strategy, based upon your risk tolerance. And I would say high quality property, digital property is best. And if you can't stomach that, buy analog property or big tech stocks or real estate or something. And if you do it that way, then I think once you ask yourself the question, am I competitive? Am I better? Am I best of the best in the world? If you are, then that makes sense to do it. Where you really get to this acid test is if you have to put your own capital into the business, you have to ask the question, is this business going to give a better yield than Bitcoin? The answer is probably no. If you don't have to put your own capital in the business, if you can go to someone else and raise millions of dollars to start up a Bitcoin mining venture, then by all means, you should do it. It's someone else's capital, right? And so you're drawing capital into the ecosystem. So the right way to think of it is, launch a Bitcoin bank like Silvergate, raise 480 million. Launch a Bitcoin miner, raise hundreds of millions. Launch a Bitcoin anything, raise money, bring it into the ecosystem and compete. But when you have excess cash flow, sweep them into Bitcoin. That would be my view on that. And if you think of it that way, then I think everything's a lot simpler. Second fork they kept in China, and then they didn't interfere with it any other way. And maybe if Elon Musk forked Bitcoin in Mars, and you had Mars coin, China coin, and Bitcoin, And all three of them started from the state of the network right now. And then they had some geographic political reason to be separated. And you could hold that China wall or that Mars wall up. And there's nobody in Mars, right? But if there was, right? If you could do that, then maybe you have another digital property, right? Maybe. And I think that's
the bar is set for altcoiners, basically. This is what you got to do.
That's a good way to say it. Satoshi set a high bar, but that's the bar, right? That's the Bitcoin standard is the Satoshi standard is a fair distribution without an ICO, without intent to profit on the efforts of others. That is just a community property, right? So that's the first thing to take away. The second utterance, every single edict drives inflation, and we have more of them than in our lives, right? Never in our lives have we seen so much government engagement with the economy. And that's what's called the inflation rate. Most everything else is a security, right? If there's an ICO and it was issued in expectation of earning a profit, and if it's a small group of people, if we're depending on the efforts of others, it meets the definition of an investment contract security. So what we're waiting for, right, is clear guidance about if you're currently owning securities or you've issued one, what do you do next? If you're trading them, what do you do next? If you want to issue a stable coin, what do I have to do to get to a stable coin? And that creates a lot of regulatory uncertainty and overhang. If you're a crypto trader, if you're a DeFi exchange, if you're a security token, all of those. But where is there no overhang? If you want to own Bitcoin as digital property for 100 years and hold it as a store of value, it's crystal clear. I could have $100 million in capital. I could spin up Yo-Yo coin and have 10 billion of Yo-Yo coin. I could mint an NFT on it and I could trade it to myself 3 times from 100,000 to 1 million to 10 million. I could print it all with basically wash trades. I could lever it up 20 to 1, have 25, 30, 40 billion of Yo-Yo coin, and then I could use it to back a stable coin, and the stable coin becomes 200 billion or 500 billion worth of US dollars. That's the nightmare scenario, right? Where you've got like nothing at the bottom. You've got a crypto punk that circulated 6 times in blind wash sales that was levered up to an altcoin, that was levered up to a stable coin that was released. And now that stuff gets into consumers' wallets and it gets used for commerce and it becomes a systemic risk. Bitcoin is the theoretical apex asset of the human race. The theoretical return on Bitcoin is higher than anything else. Everything else is dilutive. You could take your million and you could invest in a Bitcoin miner and you could wake up and the hash rate could increase by a factor of 10 and the guy that actually did the deal with you could steal your rigs. Okay, then where does that leave you? I mean, the point is you've got counterparty risk, you've got hash rate risk. You can invest it in Kazakhstan and find out the government of Kazakhstan put a triple windfall capital gains tax on your Bitcoin mining. So you've got political risk, you've got execution risk, you've got technical risk, you've got all sorts of risks. And against that, maybe there's a return. But is the risk-adjusted return higher than buying Bitcoin? I don't think so. If Bitcoin goes to zero, your Bitcoin mining investment goes to zero. If Bitcoin mining goes to the moon, then some Bitcoin miners will be successful and some will not be successful, and some might be more successful than the Bitcoin and some might not, but who knows? There's nothing to do with Bitcoin, right? Like I saw today, some crypto punk thing traded for $10 million. Okay. But, if I sold it to myself 6 times and I started by buying it for a nickel, how much is it worth? Who could say, right? And there's no way to even figure out whether the person that owned the thing sold it to themselves. Like it used to be, my concern in an auction would be, you've got your best friend bidding on it. But we're much worse than that. We're at a point right now in cyberspace where you could spin up 100 versions of yourself And you could be bidding against yourself, selling to yourself, buying from yourself. What's it worth? You know, it's like, what do you want it to be worth? How do you know? It's opaque. When you get into this issue of currency wars, you've moved into debates between nation states. And I just don't think it's a good use of time. I think it's much more constructive for us to focus upon getting people to reallocate energy from the 99% of the assets which are not currently Bitcoin and not currently digital. And if they just sweep them all to digital, right, then you'll get to see a rationalization of investment portfolios. Banks are the enemy of Bitcoin. Companies are the enemy of Bitcoin. Not your keys, not your coin. The government's the enemy of Bitcoin. But the other possibility, which just turns the entire thing on its head, is how would you feel if you woke up tomorrow and you found out that Goldman Sachs did buy $10 billion of Bitcoin and UAE bought 20 billion of Bitcoin? Would you be angry? By the way, your Bitcoin would be trading at like $4 million of Bitcoin. And you could be angry and say, no, give that back to us. I want to go back to $50,000 Bitcoin. Look, if institutions weren't involved in Bitcoin, Bitcoin would be trading at like 8,000 right now. Right? Yeah. If you look at, the last 18 months. So you could we could unwind that and you go back to $8,000 Bitcoin, or you can move forward, but it's just a taste. So, what's my big point here? It's like nobody can predict how the future will evolve, except to make this one observation. People are generally rational and they take the path of least resistance. And so at some point, it's possible that someone's going to buy the Bitcoin, not because they agree that with your most extreme vision of no governments and no companies and living together peacefully in one world currency. Maybe that's not why they're going to do it. Maybe they just want the money, right? Like as far as I can see, the people driving the market in the near term from day to day are large pools of hedge fund capital and investor capital, highly leveraged, fast money, that's cross-trading Bitcoin versus every other altcoin offshore and in DeFi with huge leverage. And their time horizons are 1 minute to 1 week. Like, what's the half-life of your money? And I would say the half-life of Bitcoin as money is forever. And the half-life of the dollar as money 10 years ago was 10 years. And the half-life of dollar as money today is 3 years.
3 years, yeah.
Right. And so if you think about, and the half-life of the Bolivar as money might be 3 weeks or 3 days, I don't know. But if we start thinking about these assets in that way, then I think it's kind of helpful, because what you realize is there are very powerful political interests that will designate one asset. And as long as that interest, as long as they exist, as long as the United States exists, they will have some influence. But you don't have to be a victim to what is the word? To the orthodoxy that there can only be one thing that's money. Once you understand that there are three things that could be money, then you can simply mix your portfolio with a mixture of a little bit of the weak one, a little bit more of the mid one, and a lot of the good one. And I think that's a very helpful metaphor for people. And then the other war, the struggle is going to be Bitcoin versus, stocks and equities versus real estate, REITs versus gold versus commodities. Right. And that's going to be a hard fought one. And there's $100 trillion at stake in both of those struggles for the next decade, right? That's going to play itself out. But if you really think of it like that, then if you want to be effective, let the diplomats sort through the issue of currencies, right? That's their job. And then if you're an evangelist or an educator in the world of Bitcoin, focus upon explaining to people why it's better for you to buy Bitcoin than buy a house in Istanbul. It's better to buy Bitcoin than buy a bar of gold, right? Help with those things, you know, because ultimately you can win that one, right? That's a battle you can win. And you gotta choose your battles and choose battles you can win that make you stronger, right? You don't start by picking a battle you can't win that you don't even need to fight. You know, generally, I believe in capitalism. I think Bitcoin's all about capitalism. And really the ethos of capitalism is you need to be the best in the world in your niche of what you do. If you're going to be a restaurant, you better be the best restaurant of that type in your neighborhood. And if you are, then maybe you'll make money, but maybe you won't make money. There's all sorts of existential risks, right? Maybe your restaurant will get forcibly shut down, right? So you have risks in every business. There are risks in mining. If you can raise lots of capital, mining is a capital intensive industry. If you can raise a lot of capital cheap, then that would be a good reason to go into Bitcoin mining. If you have a lot of rigs, that's a good reason to be mining. If you had energy, if it was free, maybe, but the truth is energy is really the tail wagging the dog here. The world's full of too much energy, and energy is only like 1, 2, 3% of the proposition. If you become a miner and you buy power from somebody else and they cut you off, they can destroy you. So it's a risk factor. But if you told me I have energy at 2 cents a kilowatt hour forever, should I be a Bitcoin miner? Not necessarily. If you can't raise capital, you're still going to get wiped out, right? Now, there's politics, there's capital, there's execution, et cetera. So I like Bitcoin mining. I think it's good business. I also think it's going to get, I also think that it's a business that calls for a very aggressive business strategy. Like you want to get big fast, like raise billions of dollars of capital and buy up all the other miners and buy up all the equipment and then raise billions of dollars of more capital. And I know there's the Bitcoin ideal, which is we want distributed mining. And okay, I'm okay with that, but I just see that when you see someone with 3 football fields full of mining rigs, right, and they're engineering this stuff, you know, you start to think this is getting to be a very scale intensive, capital intensive business. So I don't think that I would go into that business unless you really knew what you were doing. My view is the most valuable property in the universe is Bitcoin. The second most valuable property in the universe, presumably, is a Bitcoin mining rig that's producing right now. And then after that, you've got these concentric circles. After that, you can own companies that are Bitcoin companies, but they're competitive with each other. Some can win, some can lose. And then you can own non-Bitcoin companies, right? And then some are better than others. And we should have 2 strategies. One strategy is run the software business, and the other strategy is run a property business. We're in essence running a cyber development company or a cyber REIT, if you want. Like if I tell you there's 21 million blocks in cyberspace and each one's a Bitcoin, and the world's going to consist of 21 million blocks, and you showed up there 200 years before everybody else showed up, you would think I'm just going to start buying city blocks in cyberspace as fast as I can. So we bought ourselves some, and then we realized that there are more to be bought. And so we kept buying. A year ago, we were a $500 million business growing 0% a year with 500 million in a balance sheet and crumbling cash and credit. That's what we were a year ago. And the company was valued at about $1 billion. Maybe 1 times revenue for the enterprise software business. And then the cash and credit was worth 1. That's where we were a year ago. Today, we're a $500 million software business growing about 10% a year. So we got some growth out of it. We got more notoriety, better for employee morale, better for product awareness. So we got a bit of a boost. And we're a $5 billion property business, Bitcoin business, growing 100% a year or more. So we've got a high growth business, digital energy or digital property, and we've got a low growth business, enterprise software, and they're both linked and they both benefit from each other in different ways. So why did we do it? Well, first we did it defensively. And then we were opportunistic, right? Stage one is defensive. I don't want to lose my money. Stage two is opportunistic. I did it because I could. Stage three is strategic. This is a pretty good idea to buy up all of Cyber Manhattan before everybody else moves here. And if Bitcoin is appreciating 100% a year, and if I can borrow money at 5% or 1% or 6%, then my arbitrage is going to be 100%. Once you understand the inflation rate, you realize your purchasing power is going down if you're not keeping up with the cost of capital. And so your wealth is being destroyed. So first, I just wanted the number not to go down. I wanted to preserve wealth. And then we realized that it was a high quality property. I think the epiphany comes when you realize that it's the dominant digital property network, and digital property is better than physical property in every way conceivable. So if I theoretically designed digital property, I want to store $1 billion. I want to hold it in the palm of my hand, move it at the speed of light, vibrate it 1 million times a second. I want it to last forever. I want immortal, indestructible, infinite, all-powerful, programmable energy, right? Matter is energy. Energy is matter. I can convert energy. I could take $1 billion and turn it into a building. I could, in theory, turn a building back into $1 billion. I can buy $1 billion worth of electricity. I could buy $1 billion worth of guns. Whatever it is you want to do, right? That, money is ultimately monetary energy, and you can convert it into any kind of product or service or property. It's the apex. Once you realize that Bitcoin is digital property or digital money or digital energy, all of these things, then it becomes clear that everything else you could possibly own is inferior to that, right? You would really never want to own anything other than pure digital energy, right? Like why do you want to own a building, right? The only reason you want to own a building is you were going to freeze to death if you didn't have something to come in from the cold too, right? Like you would own a building to live in because otherwise you're going to freeze to death. Okay, that's a good reason. But with all your discretionary energy beyond that, if you chose to own a 50-story skyscraper in Manhattan, is that as good as digital? No, because the mayor of Manhattan can seize your building by eminent domain. If you're thinking you're going to rent the building out, the politician can tell you that you're not allowed to evict any of your tenants, even though they don't pay you, right? So the property in the physical realm can be impaired by any political jurisdiction, anyone with jurisdiction over the property. And that means the neighborhood review board, right? The neighborhood building committee can tell you you can't put an awning in front of your building. The mayor, the governor, every regulator, OSHA, environmental review boards, the Congress, the Senate, the White House, everybody in that physical domain can impair the value of your property. So not only that, it's going to be impaired. The second is it's going to be taxed, right? Because when they decide to tax your building, you can't move your building. And the third is the building is not appealing to anybody else in the universe. Like if I'm a billionaire in Beijing, why would I want a skyscraper in Manhattan? If it's illegal for me to travel to Manhattan, why would I want to pay for that thing? So if you have $1 billion of property in Manhattan, it's not fungible and it's not desirable everywhere else on earth. What I want is something that is universally desirable through all space time. How desirable will your building be in 500 years, right? Buildings, not, right? And so there's another interesting dynamic here with physical property. There's a maintenance cost. The cost of maintenance is the theoretical investment every year you have to make in order to preserve the property value. You know, if you ever own a boat, you know what that is. Stop investing in the boat sinks. If you own a building, like what's the useful life of a building? 40 years, 80 years, 100 years? Show me a building in Manhattan that's still good 200 years later. Still desirable. So property in the physical domain doesn't hold its value through time, and it doesn't hold its value through space. And it's not fungible, right? The Rockefeller Center is not the same thing as 1,000 acres in Kansas. They're different things. The Rockefeller Center is not even the same thing as another big building in Manhattan. Whereas a Bitcoin is the same as a Bitcoin. And we're back to your issue. Like, where do you get rid of volatility? One Bitcoin equals one Bitcoin, and it means the same thing. Whether or not, what is one Bitcoin? 1/21 millionth of all the energy in the network. And what is it going to be in 1,000 years? 1/21 millionth of all the energy in the network. Okay, who's that interesting to? Everybody that joins the network. Who can join the network? It's open, permissionless. Anybody on earth can join the network. Okay, so is that everybody? Well, not everybody, because some people haven't joined the network, but it is more inclusive than any other thing, any other property network. What do you call a company that has no employees and no maintenance costs? Well, Bitcoin, like. So I think that when you embrace Bitcoin as your property strategy, you can get away from the maintenance cost. The likelihood is going to be impaired, decreases exponentially. It's a lot harder to seize $1 billion of Bitcoin than it is to seize $1 billion of land, or $1 billion of art, or $1 billion of gold, or $1 billion of a building, or $1 billion of stock. Exponentially harder. If I have $1 billion in a bank, it's easy to seize $1 billion in a bank. If I wanted to take all the money from everybody in Argentina, I could do it overnight if it was sitting in cash or credit. But if I wanted to seize all the money from everybody in Argentina and they all used Bitcoin and held their own keys, I would have to incarcerate 70 million people for 90 days, and I'd have to sweat it out of them. So how hard is it to jail 70 million people for 3 months? And how many people do I need to do that? It's very difficult. 1,000 times harder, 1,000,000 times harder, 10 million times, probably 10 million to 100 million times harder to seize the asset than it is to seize cash or credit or securities. Seizing companies and seizing buildings is easy, right? The Cubans seized all the buildings, right? Everybody lost their private property in Cuba when Castro took over. That's simple. It's easy to nationalize an oil company. It's easy to seize all the gold, right? We know how to do that. It's very difficult to seize passwords in people's heads. So I look at Bitcoin and I think, well, it's a universal property. It'll last forever. It's very hard to seize. It's very hard to tax. It's easy to move, and that makes it universally appealing. Because on the day you wake up and you find that it's illegal to own Bitcoin in your country, you can either take it with you to another country. Try taking $1 billion of gold to another country with you. Try taking $1 billion of building in another country. So you can either take it with you, or you can send it somewhere, or you can sell it. And so the ability to send it, to take it, or to keep it, or to sell it, all those are 3 rights that you sacrifice when you buy a house, or a building or land or securities or credit or cash. You don't have those rights, or art or collectibles or sports teams, right? Whatever it is you think you have, you don't have property rights with those things. And ultimately, the idea of Bitcoin is nothing, is an elegant 1/21 millionth of all of the value on the network for as long as the network may last. There's nothing more stable, nothing more predictable in the entire financial universe than that, right? That is the single most stable, body in the entire financial universe. If you're looking for something to revolve around, there's nothing more stable. If you want to give joy to 8 billion people, you need digital music. And if you want to give education or enlightenment to 8 billion people, you need digital books or digital education. And if you want to give wealth to 8 billion people, you need digital property, digital money, right? And there is no other, there's nothing else that offers that promise, right? The reason Bitcoin's powerful is because at the end of the day, you can put trillions and trillions of dollars of energy on the network, and you can distribute it over something like the Lightning Network to 8 billion mobile devices, and the mobile devices cost $50. So the ability to give economic energy to 8 billion people on a $50 device and do it with integrity and do it with no friction, right? Like when you're moving stuff on the Lightning Network, you're moving it for 1 Satoshi. So it's friction-free, speed of light at any scale, $37, $37,000, $37 million, at any frequency, right? Like I want to vibrate something, right? As Tesla's point about understand frequency. If I have $1 billion of gold, I put it in a vault. The frequency is like once every 10 years. That's the velocity of the money. If I have $1 billion and I put it in a fiat currency and move it over the Visa rails and the Fed wire, then it takes 1 to 2 months to move it every time if I make a charge transaction before final settlement, it's gonna be 30 days before you know that you're not gonna get clawed back, and another 15 days or something. So 45 to 60 days after I pay you for something, you can move it. So you're talking about velocity of 6 per year, annual velocity 6 per year. I put the same money on the Bitcoin Lightning Network, and the velocity is 6 per minute, 6 per second, 6 per hour, right? You're talking about a velocity which is orders of magnitude higher. And then of course the cost is, the Visa network is 2%, 2.5% friction. Cost to move $1 billion of transactions, $25 million. The cost to move $1 billion on the Bitcoin network, 68 cents. The cost to move that on the Lightning Network, if you break it into like 100,000 transactions, is going to be 100,000 Satoshis, right? So there's nothing comparable, right? It's a revolutionary transaction network, and it's also a revolutionary monetary network, both at the same time. It's like kind of dual revolutions. Because, in one case, you can distribute economic energy to billions and billions of people, billions of times an hour. And that is something of wonder. And in the other case, you can store $1 billion of energy in a battery for 100 years and still have the energy. And we don't have any other credit or cash or asset instrument or property instrument where you could store $1 billion of economic energy for 100 years without dissipating it. And just a question of how fast, right? In gold, you dissipate 90% of it in 100 years. In fiat, like US dollars, you dissipate 98%, 99% in 100 years. in electricity, like literal electrical energy, you dissipate 100. No one can store that much electrical energy for 100 years. You dissipate it all. It's all gone. The ideal situation you want to get to eventually is, I put 100% of my assets into Bitcoin, and then I have a credit card / credit line, which is drawn against which is converted into local currency, and it is drawn against the Bitcoin. So I have $10,000 of Bitcoin and I want to spend $37. So I spend $37 and now I owe $37 against my my 50 million Satoshis. And I never really sell my Bitcoin. I just generated debt against the Bitcoin. And we're a little bit early here, but if your expense ratio is less than your expected appreciation over time, that is to say, if you expect Bitcoin to go up 10% a year, and if you have $1 million in assets and your expenses a year are 50,000, so your expense ratio is 5% a year, and you expect Bitcoin to appreciate at 10% a year. If your expense ratio is less than your expected appreciation over time, you never have to sell anything ever. You can borrow against your assets from now to the end of eternity. Now, it requires that you have a Bitcoin banking sector developed, right? You have to have a credit line against the Bitcoin, and we see that developing in different ways around the world, but ultimately that would be the ideal situation. You would want to have a situation where you're holding Bitcoin and you're drawing credit lines in the currencies that exist. And I think what we'll see is the world will reduce down to 10 currencies or 5, the Chinese currency, the US dollar, the euro. So I think that what we see is a collapse of currencies to a few. And I think you see the collapse of properties to a few, right? Like, for example, there's 100,000 buildings in the US you can buy for the cost of 1 Bitcoin, or you can buy Bitcoin. Which of the two is the easier decision? So presumably it's like a lot of things that are manufactured as stores of value, a security, a REIT, a bond. It's like, why do I need all that stuff if I can just buy Bitcoin? So I think that, how will it develop? It'll develop at different rates organically in different countries, in different markets, based upon the culture, based upon the law, based upon, you know, the circumstances of the people, and based on crises, and based on common sense. I'm going to let my asset appreciate. I'm going to fund my living expenses with debt. If I want to buy something, another asset that I think is an asset, I might still want to borrow against my Bitcoin to buy the other asset. If you actually sell your Bitcoin to buy an asset, that's a diversification. And you could diversify because you want to diversify. That's a personal decision. But if you've got an asset going up 130% a year, you know, and you said to me, Mike, name something else that you think will go up 130% a year that I can diversify into. The answer is I don't have anything, right? Like, if you said to me, okay, well, I got to split my money 50-50, half goes into Bitcoin, what's the other half? I don't know. I guess a portfolio of big tech stocks, maybe the NASDAQ, maybe a combination of Apple and Amazon and Facebook and Google. You buy some wickedly cool technology, maybe. So if you're looking for, you know, a measure of energy that's easiest to develop, or property you can develop on top of, then you want the most universally desirable property that's hardest to impair, that's easiest to develop, that can be utilized at the highest frequency. You know, when I have a hotel, if the hotel had every room booked 365 days a year, I'm obviously squeezing more revenue out of the hotel. But let's do a thought experiment. What if I had 100 rooms in the hotel and every room is booked every night, 365 days a year, and you're charging by the hour? Well, that's interesting. Now, how many hours of the year, how many room hours are actually unoccupied in the hotel, even though the hotel is theoretically booked every room night? Even if 100 people book every room night in the hotel for 365 days, they have to leave the room. They leave to go to work. They leave to go out, to a bar. They leave to commute. And in point of fact, the hotel that's fully booked is empty 2/3 of the time. So if I really could book out the room hour by hour, my revenues would triple. So you see where you get. Now, what if I could actually book out the room hour by hour to anybody in any city on earth? What if I could actually move the hotel or teleport the hotel every hour? Well, not only could I drive the occupancy up by a factor of 10, I could also increase the pricing. I could move the hotel to the place in the world that the Venice for the Venice Film Festival, or I can move it to wherever the Super Bowl is. So if I could move the hotel to the place where the room rates are the highest by the hour, my utilization would go up, my price per hour would go up. What if my costs were fixed? Well, now, if you think about it, right, the profitability of a hotel running at 47% occupancy at standard rates in Dallas, Texas is 10%. The profitability of the hotel running at 100% occupancy at standard rates goes to 70%. The profit of the hotel running at 300% occupancy goes to 200%. The profitability of the hotel running at 300% occupancy at the highest marginal rate you can get for a room anywhere on earth at any point in time is going to 3,000% or 30,000%. And so what did I just do? I just dematerialized the property and I moved it with a frequency which was unimaginable. That's what Bitcoin is, right? That's what happens when you dematerialize property. You have the option to move it with a frequency which is unimaginable to the highest marginal use, right? And when people get their heads around that, you realize that, well, do you want to own a hotel in Texas? No. Do you want to own anything fixed in the real world? No. What do you want to own? You want to own the apex property in cyberspace that's universally desirable to everybody, and then you want to loan it out to them for the number of seconds that they want to use it, and then snatch it back at no cost or 1 Satoshi. And that really is what's interesting about Bitcoin and everything around it, right? I mean, all of the possibility to develop those businesses and develop those applications. So we don't have them all now. I mean, DeFi, I just described DeFi, by the way, in a way. I described, DeFi on Lightning, on Bitcoin with an intelligent, exchange hunting for highest optimal use. But you don't have to develop all those businesses immediately to grasp the potential. All you got to do is figure out that the potential is there, the incentive is there. You can do one of two things. You can either build one of those businesses, which is hard. It's hard to build Binance. It's hard to build an exchange. It's hard to build PayPal. It's hard to build Fidelity. It's just hard. You got to deal with the regulatory issues, the technical issues, the security issues. Or the other thing you can do is you can just own the Bitcoin and wait. There's an intermediate. You can own the Bitcoin and you can loan it out, but that means you have to basically pick the counterparty you trust. So maybe I get 130% appreciation by just waiting in cold storage. Maybe I get 135 or 140% appreciate. I get an extra boost of 5% to 10% by loaning it out and trusting someone else. Or maybe I go and create my own Coinbase or create my own, fill in the blank, create Abra, create Square, create the next great payment network or the next great bank. Yeah, you do that. That's an endeavor. And maybe if you're really good and you work really hard, you'll create something worth billions and billions of dollars, but that's a different thing. That's industry. So the way I look at it is, you have capital, you got to invest it. If I lived 200 years ago, if you go back ex post facto, if I had a priori knowledge, I would go back and buy Manhattan in 1900, all of it. Why wouldn't you? Buy everything you can, just buy the land, hold it, keep it in the family, right? That would be a good idea. Buy apex property 100 years before everybody else has to move there and wait. That's what I would do then. Today, knowing what we know now, I would buy the apex property in cyberspace. And the apex property in cyberspace is Bitcoin, and I would just wait and let nature take its course. People are going to do everything they can to develop those applications, those businesses on top of digital property. And as they succeed, they're going to lock up the property. They're going to create more demand for it. They're going to drive up the price of it. And you're going to benefit as a property holder at any scale, right? You can have $37 worth of it or $37 billion worth of it. That's the option you didn't have in Manhattan. You couldn't buy $37 worth of dirt in Manhattan. You had to buy it one block at a time. And so today, if you want to own natural gas rights or commodities or commercial real estate, you got to buy into a REIT or, something like that. You have to buy a security, which gives you a share of the thing. The beauty of Bitcoin is you don't have to buy the security if you want. You can buy the underlying property in a pristine unit, 37 million Satoshis, and it has the same security and the same financial appreciation potential as if you bought as much as we bought. I think there's a very vibrant, dynamically evolving market of Bitcoin applications that are mutating faster than we can speak or describe them in every jurisdiction. It's like a petri dish of life. Like, for example, there's a use case of Bitcoin, which is I'm going to use it and I'm going to use a hardware wallet and place a certain amount in cold storage. Okay, there's a lot of people that have mastered that, and that's a good thing. But even the people that have mastered that would admit that there's another use case, which is the Chivo application in El Salvador, right? That is a downloadable, wallet that's moving around Bitcoin on the Lightning Network, and it's riskier, right? You've got KYC involved, so it's not as private, and it's riskier because you could lose your mobile phone, but it's faster. And then you've got a third application, which is like Strike or a third party Lightning wallet, which is, and there are some, Moon or Breeze, they're not KYC, they're non-custodial. And that's a third application. And did that benefit from the existence of the Chivo wallet? Sure, it does. The demand for those wallets will go up because the Chivo wallet goes up. And then in the defense of the president of El Salvador, kind of hard to give $30 worth of Bitcoin to every citizen unless you do some kind of KYC citizenship check, right? Otherwise, one citizen claims it 10 million times, right? So, and everybody else gets nothing. So there's an application that's different there. Now, there's a fourth application, right? What if you're a company? A corporation is going to take the view that they don't want to have a single individual. They'll want to have a multi-signature relationship when it comes to custody of their Bitcoin, and they'll have more sophisticated custodial rules. A government would be even different. If you were a citizen of a city, and the city put $1 billion of Bitcoin on its balance sheet, would you want the mayor to carry the keys around? And by the way, if you were the mayor, would you want people to know that you actually have the keys? I mean, wouldn't you be concerned about getting kidnapped and having your fingers ripped off one at a time, or having a family member kidnapped? So in that particular case, they're going to actually be interested in a different thing, right? So that's another application, and that's multi-signature application, but then who should be signing it? And in some cases, it's not even multi-sig across people, it's multi-sig across organizations, like 3 agencies or 3 corporations or auditors might need to have some involvement. So I'm not threatened by the entry of banks. I think that they're all just different manifestations of Bitcoin. Bitcoin is property, and you can build things on top of it. One thing you can build on top of it is a checking account and a savings account. You know, we need Square and PayPal to offer their mobile apps on top of it, but we also could use an ETF. For example, there are organizations in our society. I mean, if I'm an institutional investor, I have $2 billion. It took me 30 years to raise the $2 billion. The money's raised from firemen's pension funds and unions and other organizations and foundations, the Rockefeller Foundation. And they gave me the money, and they gave it to me 15 years ago. And I have the ability to buy securities with it, but I don't have the ability to buy property with it, or I don't have the ability to buy Bitcoin with it. And if I wanted to buy Bitcoin, I would have to convince a board of directors with 28 people on it that meets once every 6 months. And then I would have to convince my outside auditors, and then I'd have to change the law in the state of Utah. And then I would have to go back to all of my limited partners and explain to them. And then I would have to actually educate 252 people and my outside auditors. And after I did that, I go through a 1-year process to establish my relationship with the Bitcoin exchange. Then I have to figure out how we're going to custody it. And that would take me about, 5 years. And I'd probably fail 99% of the time. Or I could punch a button and buy $27 million worth of the Bitcoin ETF. And I could do that in 30 seconds. Now, is there a role for an ETF? Sure, there is for that. You know, you can say, well, the person that invests the fireman's fund ought to actually hold their own keys. Well, if you were a retired fireman and you had your entire pension, and someone said, there's one dude we hired last week and he has $2 billion of your money and he's got the keys and he just disappeared, you might not take kindly to that, right? So it's not always the case that the right answer is, cold storage, hardware wallet, self-custody. It depends upon who you are. And we can't let the perfect be the enemy of the good. I would say there's probably 1,000 different instantiations. In fact, more than that. For example, the ETF is a way to get Bitcoin exposure. Now you could say, is that as good as holding the Bitcoin? No. Is it better than holding an ETF that's invested in negative yielding sovereign debt of Italy? Yes. My choice isn't the choice to own Bitcoin or own the ETF. My choice is to own the Italian sovereign debt ETF or own the Bitcoin ETF. That's my choice. So once you realize that, you realize that what we want traditional banks to offer certain types of Bitcoin accounts. We want the new mobile banks like Square and PayPal. You're going to have the Square, but you'll have Square that lets you hold Bitcoin and move it out of Square and move it on a cash tag, but they don't support Lightning yet. But at some point, Square Cash App will support Lightning. They'll be better. When PayPal supported Bitcoin, they didn't support Bitcoin withdrawals. They were worse. When they add Bitcoin withdrawals, they're better. When they add Lightning, they'll be better still, right? There's going to be non-custodial wallets. They're better, right? You're going to have layers of, but the guys in the hardware wallet business say non-custodial hot wallets on mobile phones aren't as good. So I'm going to stack up layers of Bitcoin, and I can name probably 20 off the top of my head. You can own a piece of, you can own a junk bond from MicroStrategy that yields 6 and 8% interest. Is that as good as owning Bitcoin? No. Is it better than owning a junk bond that isn't backed by Bitcoin that yields 2% interest? Yeah. You see, so you can own a convert in MicroStrategy and that yields like whatever, 0.5% interest, but it's backed by Bitcoin. If Bitcoin goes up by a factor of 10, your bond's going to go up by a factor of 5. Is that better than owning Bitcoin? No. Is it better than owning another convertible bond that's backed by some other, the space tourism or something? Maybe, right? Depends. So what you have is a universe of people that can own certain types of securities and certain types of properties by charter. And then you have a universe of securities and properties of Bitcoin that are being offered as the banking sector and the financial sector evolves. When the sector evolves, when we have a Bitcoin ETF in the US, billions and billions of dollars will flow into Bitcoin that under no circumstances would have found their way into Bitcoin otherwise. I know people. I know a 70-year-old guy. He's got a phone in his hand. He might have something like a PayPal on it. He can do this. He can go $2,000 Bitcoin. That's what he can do. If you go back to him and say, I need you to listen to 500 hours of videos and learn to go through a 97-step process and buy these 14 things, it's like, I can't do it. Right? So it's literally like, I cannot do it. In theory, it would be nice if we all had our own gun and our own shack on our own ranch with our own livestock, and we could grow our own food and we could ride our horses and we could go off the grid, et cetera. But it gets real when you got to perform your own appendectomy. And at that point, you start thinking maybe this living off the grid thing wasn't, such a good idea. Right. And so I think with Bitcoin, you've got different services in every country, in every market, and what's legally possible and possible from a regulatory point of view, and what's technically possible and what's practical is changing all the time. I happen to think that the best outcome is the greatest diversity of market opportunities, because I'm not smart enough to know the one right answer. And I do think that if you look at consumers, there's a different solution for different types of individuals. If you look at my 83-year-old dad, right? He's not going to buy anything with a mobile app, but he might sell his stock portfolio and put it into a Bitcoin ETF if he could do that with, right? So individuals, they have their own needs. Corporations are different. Some companies can buy Bitcoin. Some companies, for example, would want a treasury service from Fidelity that gave them 3% yield, where they could just buy $10 million worth of it on a phone call, and they don't want to custody it. And right now their choice is hold cash or tell JP Morgan or Bank of America or Citigroup to put it in. The treasurers, they just sweep billions of dollars into short dated sovereign debt portfolios. Buy me $157 million worth of 90-day government debt. Thank you, click. Right? They need something like a treasury type service backed by Bitcoin. If you go to institutions, every institution's got a different charter. Some people by law, they can do convertible debt arbitrage. If you give them a convertible debt instrument, they can buy it. If you don't, they can't. It's not really an issue of do they want to, they can't. The guy that's sitting with you can talk with you for 5 minutes, punch a button and buy $500 million worth of the security. And you could talk to him for 10,000 hours and he can't buy the underlying Bitcoin and take personal custody of it. Just can't. So all those institutions are different. And then stuff gets really real when you get to municipal, state, and federal governments. Under what circumstances do you want, what if Jerome Powell said tomorrow, we decided to buy $100 billion of Bitcoin. How do you feel about that? And then how would you like him to do that? How should he go about that? You want Jerome Powell to walk around with the keys? Like, what, you want the 12 members of the Federal Reserve Board? I mean, who do you really trust? What if we elect a new president and the old one just won't give up the money? Like what if my family just keeps the 100 billion? So when you get into the political domain, now it's different. So I tend to think there's a place for all those things, and there's some that will be more successful than others. And there's, some Bitcoin banks will fail, right? Some Bitcoin exchanges are crooked. Sometimes they have security issues. Sometimes somebody steals all the Bitcoin, right? It's happened. It will happen again, right? The market needs to squeeze out the weak offerings. Even hardware wallets, there are some that are better than others, right? Software wallets, some are better than others. Non-custodial, custodial. They're not all equal. They're not all perfect, right? So I think that the competition should continue. I think the beauty of the open network is the protocols are out there. When Apple Computer decides to build their own Apple Pay Bitcoin offering, they have access to the protocols. Will they do better than Square? Will they do better than PayPal? Will they do better than Google? I don't know. Here's what I know. They should be punished if they don't, right? The money, the capital should go away from the people that do a poor job to the people that do the best job. Who gets to make the decision? The people with the capital should make the decision. I shouldn't be called. If I tweet at you, take all your money and put it in this software wallet, you would think it's a little bit offensive. So let the people with the money make the decision, and give them an entire universe of options. Some are going to make a mistake. Some are going to lose their keys. Some are going to lose their phone. Some exchanges are going to get hacked, right? It's like, that's life in the universe. That which does not kill us makes us stronger. Some stuff kills us. That still makes us stronger. The part of the herd that doesn't die is the stronger part of the herd. And that's Darwinian, natural selection. All the alternatives are less desirable, in my opinion. I think there's a very dynamic competitive market in Bitcoin mining on the security side of the network. And I think there's a very dynamic competitive market in Bitcoin and the exchanges. And I think there's a dynamic competitive market in the applications, so call them the banks, or the financial application themselves. And all three of those are very Darwinian to the benefit of the network. So for example, if I take an S19 miner and 30 megawatts of energy, I can create an exahash. It took me 150 megawatts of energy to create an exahash with an S9 miner. If you take the generation before that, you're talking about 500 megawatts of energy. So if I'm sitting on mining equipment after 6 to 8 years, I'm obsolete, and my the break-even point for the S19 is 40 cents, 45 cents a kilowatt hour. The break-even point for the S9 is 9 cents a kilowatt hour. The break-even point for the previous generation is 2 cents a kilowatt hour. What's happening is the Bitcoin mining network is upgrading its technology and squeezing off the grid all of the obsolete or the third generation, the older technology. If you can't upgrade, if you don't have the money to buy the new generation technology, you got to pay the price with energy. And at some point you need 50x as much energy. You can't afford to pay the price. You're getting squeezed out no matter what. If you can't get the Bitcoin mining equipment vendor to sell to you, like, what if Bitmain won't sell to me? Okay, well, you're still losing. It's a competition to maintain the trust of the vendor. There's a competition at the hardware layer. If you don't like the fact that Bitmain controls most of the market, you go to another vendor and you get them to manufacture a mining rig, which is comparable. Okay, so we're continually creating new hash power. That's competitive. We're looking for cheaper sources of energy. That's competitive. If you trusted a free source of energy in China and the government cut you off, well, you lost. That was a bad decision. And so you're looking for political support. If the energy provider isn't trustworthy, if they pull the rug out from under you, you're out of luck, you're lost. If the politicians pull their political support, you're lost. If you can't upgrade your hardware, you're lost. If you engineer your mining facility poorly and you don't do the right heat dissipation, you burn out your rigs, you're lost. If you can't raise capital in order to buy new mining equipment, you're lost. If you don't have the trust of the capital markets, right? Marathon and Riot are publicly trading. They can go and they can raise equity and debt. If you can't go public, you're at a disadvantage. If you're in a market where there are no capital markets, the Chinese can't take their Chinese mining companies public. They're at a disadvantage. And so on the mining side, there's a competition for capital. There's a competition to engineer mining facilities. There's a competition to design semiconductors, SHA-256 mining rigs. There's a competition to operate. By the way, you can't get ripped off by your employees either, right? All of these things, there's a competition to find supportive political jurisdictions. That's never ending. What's the result on Bitcoin? Bitcoin gets more secure and more robust and more anti-fragile. It's not inflationary, right? Because the protocol is locked in. The only result is the network decentralizes, or like, would Bitcoin be at risk if all the mining was in one place and one politician could turn it off at the same time with the snap of a finger? Yes. So what happens when someone does that on a small part of the network? It teaches everybody else and they decentralize and they're looking for places. If I'm going to invest $500 million in Bitcoin mining, don't you think I'm going to pick a jurisdiction where they're not likely to outlaw me in the next decade? Like there's a reason I might want to go to Texas and not go to, say, New York or California, right? I'm going to go find a supportive jurisdiction. So the mining network has got a very healthy competitive dynamic across 5 different types of capital: engineering capital, semiconductor, technical capital, political capital, financial capital, and even human capital. So that's going on, and that's good to the entire network. On the exchange side, well, you see that in process right now. All of the migration, Coinbase is competing with Binance, competing with FTX, competing with Square, competing with PayPal. What's going to happen? Do I want a crypto exchange, a Bitcoin only exchange? Do I want a Bitcoin only non-custodial, custodial? Do I want to have leverage or not leverage? Well, there's legal issues, there's technical issues, there's market-driven issues. Ultimately, the competition is driving more diversity and more choice, and people are going to migrate to the thing they're most comfortable with. The other day, I bought $30 worth of Bitcoin. I bought it on one application and paid 69-cent fee. And then I went and I tried Strike, and I paid next to nothing. I thought that's kind of cool. Okay, so thank you, Jack Mahlers. We appreciate that. Competition makes us all better, right? There's pressure, and that pressure will continue. So when will that end? That won't end, right? I mean, it's a Herculean lift that El Salvador managed to deliver the Chivo wallet in 90 days. But there's already people complaining about it. It's custodial and it's KYC'd, and they'll be in the next thing. Okay, well, if we roll forward to the next generation every 90 days or every 6 months, that seems pretty healthy to me. And we need that, right? Because we can never make the exchanges too efficient. We can never make the wallets too functional or too secure. We're going to continue with that. And the beauty is, look, we need Square to do what they're doing. Why? Because you need a big company to actually compete with Apple. Apple Computer is not going to enter the Bitcoin space because they're threatened by a non-custodial wallet, coming out of South America, right? They're not going to compete. They're not going to enter the space for Chivo either. but they will enter the space if they see Square and PayPal generating hundreds of billions of dollars of market cap. If you think that Square is going to take 500 million users off of Apple Pay, that will cause a response from a Facebook or a Google or an Apple. So it's useful to have that competition going there, because we might want Apple to decide to buy 100 billion of Bitcoin and to build Bitcoin into 1 billion iPhones. That might, and create a secure element as a hardware wallet on the iPhone. That would be a useful thing. So that competition is useful in that regime. But on the other hand, the competition of Moon versus Breeze versus, Strike versus whatever, I mean, that's useful too. Non-custodial versus custodial, Lightning only. And there's going to be a different wallet in every single country, and you're going to have jurisdictions that are going to have an impact. So I think that's good. And then I think the third area we talked about that I mentioned is just applications or banking apps. Like MicroStrategy has a convertible bond. There are hundreds of billions of dollars of capital that can buy convertible bonds. Okay. Is it good or is it bad? Well, it's the only Bitcoin-backed convertible bond. There's only 2 convertible bonds in the world that are backed by Bitcoin, and we issued both of them. Okay. So then there's a junk bond backed by Bitcoin. There's one of them in the world. We issued it. Okay. There'll be ETFs. There'll be other kinds of products. They all compete with each other. Each one of them meets a different need in the market. Well, what if someone else comes along with a better bond? Okay, well, that's good too. What if Coinbase turned around tomorrow and decided to issue $20 billion worth of convertible bonds to buy Bitcoin? Would I be upset? Well, like maybe it would make the MicroStrategy bond less desirable, but on the other hand, make Bitcoin more desirable. And then the Bitcoin would trade up, and then MicroStrategy equity would trade up, and then the MicroStrategy bond would trade up. And so the competition is probably a good thing. And if JP Morgan and Morgan Stanley and Goldman Sachs decided they wanted to start to do this, maybe that's a good thing for everybody. So I think ultimately, in fact, I won't say maybe, right? The competition is good. The more options there are for Bitcoin securities, the better it is for Bitcoin. The more options there are for Bitcoin wallets and Bitcoin exchanges, the better it is for Bitcoin. And the more competition in Bitcoin mining, the better it is for Bitcoin. The more Bitcoin mining rig companies, the better it is for Bitcoin. Bitcoin wins no matter what happens. Having said all that, and this is what I say to entrepreneurs, if you have a Bitcoin company, there's a 99% chance or a 99% failure rate for most corporations over a long enough period of time, right? There's a lot of, there were hundreds and hundreds of companies that wanted to be Apple's iPhone. And how many companies wanted to be Instagram? And how many companies wanted to be Facebook? And how many companies wanted to be Amazon? For Amazon to win, 15,000 retailers have to lose. Okay, so competition is good for the underlying network. It'll be great for the protocol of Bitcoin. It'll be great for the asset value of Bitcoin. It's not good for the competitor. Like, you're going to have to fight tooth and nail, with every iota of your energy to succeed in whatever market you choose to go into. And if you're going to go into that market, you need to have a set of strategic assets. Ideally, like, for example, Fidelity has 22 million customers, and they've been selling treasury services and funds to big institutions for the past 50 years. Can they offer a Bitcoin fund? Sure. Can they put Bitcoin into their fixed income fund products? Yeah, they have $2 trillion worth of that stuff. Okay. Are they going to defeat Square Cash App? No. Who's got more customers, Jack Dorsey or Fidelity? Jack Dorsey. He's got more than 20 million. Now, Jack Dorsey's not competing against Fidelity. He's competing against Apple and PayPal in a different way. and they've got their assets. So so what's his advantage? He's more nimble than they are. And what's your advantage? Maybe you're more nimble than someone bigger than you. And can you turn that into a compelling, sustainable advantage? Maybe. Apple did it. Google did it. Yahoo came first. You can. Are the odds in your favor? No. What's the most rational strategy if you're a competitor? Take your entire balance sheet and invest it in Bitcoin, and then borrow against your balance sheet to fund your operations. Right? If you raised $100 million to build a new Bitcoin software wallet, I would say take the 100 million, buy Bitcoin with it, and now pay your payroll by borrowing against the Bitcoin. And if you succeed, more power to you. You'll be worth a lot more than, what's 100 million? 20 Bitcoin per million. So you buy 2,000 Bitcoin, right? So you'll be worth 2,000 Bitcoin if you just invest your treasury. I think Bitcoin's going to 1 million next stop, right? So 2,000 times 1 million is pretty good. Nothing wrong with that. And if the business itself works, you'll be worth 4,000 Bitcoin. But if you hold 100 million in cash and the business doesn't work, you'll be worth nothing, or zero. Right? That same logic holds for Bitcoin miners. Right? If you're mining Bitcoin, you never want to sell any Bitcoin. And if you raise money, you want to buy Bitcoin with the money you raise, and then you want to borrow against the Bitcoin to pay the operating expenses. If you do that, if you believe in Bitcoin, it's obvious. If you don't believe in Bitcoin, maybe you shouldn't be in the business. Like, if you're going to look me in the face and if you don't think Bitcoin's going to $1 million a coin and then $10 million a coin, I don't think you should be a Bitcoin miner. I don't think you should be a Bitcoin exchange. I don't think you should be a Bitcoin wallet. I don't think you should. I just don't think you should be. You shouldn't be a pure play focused in the business at all, because you're already a loser. You've already decided you're going to lose. If you think your assets going to zero, it's hopeless. All these other things. If you think it's not going to zero, then rational thinking is the competition in the market is making my Bitcoin more valuable. That's good. But the competition is making my existing business less profitable. That's bad. And if I'm a genius and I execute well, maybe I can stay ahead of everybody else. Maybe. But while I'm doing that, every single free dollar I can raise, I should convert to Bitcoin, because there's out of 100 possibilities, there's 99 paths where you fail and Bitcoin succeeds. And there's one path where you fail, where you succeed and Bitcoin succeeds. And, some people don't think Bitcoin is going to succeed, but they're not with us, right? You don't think Bitcoin is going to succeed, go do something else, whatever with your life, but don't try to create a Bitcoin business. My closing remark is, I thought Bitcoin was a good idea in August of 2020. There's every single month for the past 13 months, there have been fundamental developments in the space that have made it a better idea. Every single month, every week, I almost see a new development that makes the network stronger, smarter, faster, harder. It makes it more anti-fragile. It makes it more like, it becomes clearer and clearer that this is the future of digital property. This is digital energy. This is the future of digital money. This is the solution to the problems of the world. This is a macroeconomic imperative for $500 trillion worth of capital. This is a technical imperative for everybody in the technology industry and the energy industry. And this is a moral imperative for everybody on earth, right? So I've just become more convicted every single week, every single month that's gone by. There's not a single thing that's happened the past 13 months that I thought caused me to think that the future was riskier or less certain. I mean, even the China exodus, right, which was probably the most brutal event that we've seen, it was a good thing for the network, and it removed the biggest existential threats. Is Bitcoin going to be hijacked by the Chinese government? What about a 51% attack? How anti-fragile is the network? Is Bitcoin American or Chinese technology? After the China exodus, it became clear that Bitcoin is US technology. This is good for the Western world. This is part of the Western technology stack. This is Google and Apple and Amazon and Facebook and Bitcoin, right? This is that. So the worst thing that happened was the best thing that happened. Everything else has been a good thing to happen. It's like, you're watching every shoe drop. Companies adopting, banks adopting, politicians supporting, right? The negative FUD in the media is just people noticing that Bitcoin is the most disruptive technology of the decade. And even the negative publicity is positive publicity. It's all just marketing Bitcoin. It's like, if these people hate on it so much, why? It must be really good that they're so afraid of it. And where, how you have a shock wave? A shock wave forms when you move faster than the air. If I move through the air faster than the air can flow around me, then I create a shock wave. I'm disrupting laminar flow and I'm getting turbulence because I'm going too fast. Okay. Bitcoin is creating turbulence because it's going too fast. Right? When you see some uninformed politician that critiques it, it's because they were asked to have an opinion and they had 10 minutes to study it. And so they give an uninformed opinion. When some billionaire investor says they like gold better, it's because they're asked to have an opinion and they spent 30 years studying gold and they haven't spent 30 hours or 300 hours or 1,000 hours studying Bitcoin. They had 30 minutes, 60 minutes, 15 minutes. A lot of people, when these editorials are written in the Journal and the New York Times, I never seen anybody ever say, oh, I spent 1,000 hours studying Bitcoin. Let me break down my problems with it. I never seen anybody say, I spent 100 hours studying it. Let me tell you the 13 problems I have. There are no informed critiques. I have yet to see them. There are uninformed critiques. And what is that? That's the same as your fighter jet slamming into a wall of air faster than the speed of sound, and you get a shock wave, and you get turbulence, and you get heat, and you get sound and fury. And is that a bad thing? It just means we're moving fast, right? We're moving very fast, and we're getting noticed, and everyone has to notice it. Right. And when you're asking the spokesperson for the Kremlin, for Putin, whether or not Russia is going to adopt Bitcoin as the national currency, that's not, when they say not yet or no, that's not a negative signal. That's a positive signal. Nobody asked Putin whether they're going to adopt Apple stock or gold or silver or the giant stone coin of the Yap people as currency in Russia, right? There's only one question they're asking them. And they're asking them the question because it's on the table, and that's indicative of the success of Bitcoin. So to summarize, I am more bullish than ever.
Yep.